Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.
Our junior gold stocks on the verge of lighting the blue touch paper. I'm Paul Harris at the 2024 Precious Metals Summit in Beaver Creek, and joining me today to answer this question is Dr. Stephen Enders, Executive Chair of Brooks & Nelson. Dr. Enders, welcome to Kitco.
Thank you. Thanks for having me.
Now, you had the honor and the privilege of opening the conference with a keynote presentation today. What were some of the key themes you discussed?
The key theme was telling people who are on the buy side in particular that they need to do a better job at management due diligence. So the industry does a really good job of technical due diligence and legal due diligence, and even now ESG, social performance and environmental. But what our research has shown is that the biggest issue that mining investments suffer from is poor management, and yet very few companies invest the amount of time required to understand the kind of team that they're going to be investing in.
Why are some companies afflicted by poor management? Is there something systemic in the way that companies are formed and operated, the way the boards operate, that means that the wrong people are in the wrong positions?
My personal take is that there are too many companies. And so there's a dilution of the talent that's out there. But in any organization, you're going to have top people, whether it's the top students in a class or the top employees in a company. They're a small subset of overall. It doesn't mean that the rest of the employees aren't any good. It just means they are not, the top ones that make a difference. And so when that talent's diluted across the whole industry, I think we see a talent shortage and a performance loss because of that.
Now, here at the Precious Metals Summit, I believe there's, let's say, 200 companies here, 200 issuers here. What are some red flags or green flags that are perhaps easy for investors to see?
So what I like to tell people is they need to look at who the partners are in a company. In other words, who is actually funding a project or a company. Who are their partners? They oftentimes will do due diligence for them. But the biggest flag that I see is if an investment company wants to look at a management team and the management team is reluctant to allow for blind references or reluctant to have either the funding company or a third-party contractor come in and do a fairly deep dive on management due diligence, it's a flag. It's a flag. And if they totally resist, it's a red flag.
I imagine that those sort of aspects go into sort of M&A equations in terms of there being forces resisting deals. Oftentimes it's the management, because management can lose their job. In terms of skin in the game, it's often seen as a good thing that management has a lot of skin in the game to align themselves with their shareholders. Is there perhaps having too much skin in the game where management have too much of their own personal wealth in the company stock and therefore they perhaps resist transactions that they otherwise shouldn't?
Yeah, I mean, one of the things we found in our research is previous work that was published that talks about the role of CEO has in these companies, and a strong CEO can have an outsized influence on a positive income, and can have an outsized influence on a negative impact, a negative outcome of an M&A transaction or an investment, and it's not just the CEO that needs to be evaluated. It needs to be the top team, the key players in a company, either on the board or on the management team or the execution team, say on a project that's going to be built.
Okay, let's change tack a little bit, Dr. Enders. Gold is at $2,500 an ounce, more or less. Some gold stocks are up 100% year to date, but not all. The crucial question, I imagine, for many of the delegates here is, where are we in the junior space at the moment? Are junior stocks on the verge of a breakout?
We would all like to hope that that's the case. But I think that not all junior stocks are the same and not all projects are the same. And I actually think that the projects that are of value and have potential will eventually get funding, and the share prices of those companies will eventually rise. But there's a lag. And there's a lag because of the lack of performance of the junior sector in the last super cycle, where it was overpromise, underdeliver, and it took a lot of people out of the investment side of that.
Another aspect there is obviously funding. Juniors have to have funding to advance their projects to a stage where they become interesting to other people. But we're in a really tough spot, despite the fact that gold is at $2,500, that gold is, let's say, $30 per ounce. It's still very, very difficult for juniors to get funding. How is that really sort of crimping things?
So it's the same issue as we have with talent. There are too many companies with not enough money to advance their projects. So I looked at one company earlier this summer, and I think the company should have been raising $15 million and doing a 30,000 meter exploration program, and they were trying to raise a couple $1 million and doing a very much smaller exploration program that will never be enough to be able to advance that project to a good decision point. We see that all across the industry, is that the good projects typically don't have enough money to do what's needed, and the bad projects have too much money.
I mean, is that a situation that's always been and always will be?
Unfortunately, it seems to be the case. And so the investors, the individual investors and the companies looking at them need to be fully aware of not just the potential of the project or the company that they're working in, but whether the people can execute on it or not.
Now, the business plan of a lot of juniors is to eventually be bought out by a bigger company. We've seen some M&A in the past months, but not an excessive amount of it. What do you think is holding back M&A in the junior space? And this, of course, bearing in mind metals prices are high and the share prices of a lot of companies are, near 52-week lows.
So I think that's the issue right there. Why you're not seeing a lot of M&A is the companies that would like to be bought out believe that it's not a good time because their share price is so low, their market cap is so low. They think that they're leaving something on the table. I think that's a big overhang. Is the issue is they don't think that they're being fairly valued, and so they're reluctant to want to trigger M&A or accept it.
That seems to be a very risky strategy because obviously your value is what the market tells you it is.
I agree with you.
And if you resist a deal, then you may not get another shot.
I agree with you. I think consolidation would be good for the junior sector, but I actually think what would be good for the junior sector is a shakeout of all the really poor quality companies and poor quality assets that are out there.
I think a lot of people would share that sentiment, Dr. Enders, but how would that occur? How could that occur? The markets, the stock exchanges have no incentive to cut people off when their market capitalization falls below a certain amount, or when their working capital falls between a certain amount. So what could trigger that?
So I don't see it happening in the copper and the gold space because of the strength of those commodity prices. But certainly I would think in some of the other commodities, lithium is one, it's had a really great run and then now it's not, that there might be some companies that get shaken out of there. But when you look at from an exploration perspective and a junior perspective, 70% of the juniors and 70% of the exploration funds are going into copper and gold. It's going to be a long time for that to happen. So there's going to be a lot of chasing of, in general, properties that probably shouldn't be advanced. Okay.
Now, in terms of M&A, is there sort of one deal that you think is a no-brainer to happen that you'd really like to see happen that would make a lot of sense?
I have to tell you that I don't have one to share. I haven't given it a lot of thought. And that's just where I'm at in my career. I've disinvested in where I'm at. I'm at a point of reassessing what I want to do going forward in my retirement. So I don't have that yet.
Okay. Maybe we can have that in a future conversation. Now, one of the key messages coming through here is it's still very difficult for juniors to raise capital. Investors are still wary, shying away from the sector. And this despite higher gold prices. And the miners really starting to see margins expand, seeing their free cash flow expand. So what will it take for the generalists to start investing in the gold sector again, in gold equities?
My sense is that the industry, especially the sector that you're talking about, needs to deliver on what they say they're going to do rather than disappoint. And I think we need some good examples out there of successes that people can point to, and then the lessons learned from those successes that can be transferred to other companies and say, oh, that's the way to do it. And I think we'll draw more investment dollars into it. But I think the industry in particular has been disappointed.
Are there any companies that you think have done a good job?
Well, I think the private equity sector has done really well, and of course, my partners in Cooper Canning, I believe, did it well. But that's private equity money, and that's not the same as sort of the general investor coming in or the money coming in sort of from the public space.
Where do you see at the moment the main competition to the space? Is it in the sort of physical metal? Is it in the blue chip tech stocks? Is it in something else?
It's certainly not in mining, right? It's certainly not in mining and mineral exploration. And we thought for a while it was the tech space. And then we thought for a while that it was digital currencies. And then we thought for a while it was marijuana. It's gone. And maybe there's a generation of investors that has to change before this comes back. It's really frustrating to those of us who are involved in companies or who own stocks in these companies that their stock is lagging behind the metal price.
Very frustrating, yes. How do you think the rest of the year will play out in the gold space?
I'm a bull on gold prices, but I don't think it's going to go to $10,000 an ounce, right? But I think we're going to have a strong gold price for the rest of the year, and I think copper will probably come off a bit just because of copper plays to a different drummer, right? It marches to a different drummer than gold. But I'd like to see a strong gold price throughout the rest of the year.
Okay. Well, Dr. Stephen Enders, thank you very much for joining us today.
Thank you. It's a pleasure to be here.
I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.